Greetings. I'd like to welcome everyone in our audience today. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I am very confident will be an engaging discussion. Our topic today is maximizing engagement in digital banking, the power of real-time data and integrated experiences. Our sponsor is Precisely. Our host today is American Banker, and my name is Mike Sisk. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Crane's Nerd Business, Inc., Institutional Investor, Strategy and Business, and Worth. And I am very, very pleased to introduce our two speakers today. Hector Pages is the line of business leader for FIS's Digital One banking platform business for large financial institutions. In this capacity, Hector has P&L responsibility and general management oversight for the business, helping drive its growth and scale as part of FIS's next-gen banking platform. Hector was most recently practice lead for Cognizant's Banking and Financial Services Management Consulting Unit, responsible for driving growth, delivery, and thought leadership for a $20 million digital banking and payments practice. And we are very pleased to have Hector with us today. And joining him, I would like to welcome back Richard Bishop. Richard joined Cedar CX in 2005 as Client Service Delivery Director, overseeing all aspects of ongoing service delivery and partner management with FIS, one of the world's largest financial service providers. And in 2012, Richard left Cedar CX to join FIS as a Managing Director, guiding relationships with large financial institutions such as TIAA-CREF, Barclays, Sallie Mae, BB&T, Nationwide, and Ameriprise. In 2015, Richard returned to Cedar CX to manage the FIS Cedar CX partnership and to lead the organization's sales and business development team within financial services and mortgage. And Richard has now joined the Precisely team in the same capacity as his role within Cedar CX, where he is Precisely's SVP of Financial Services. So also just really delighted to have Richard back with us today as well. Just before we jump into things, quick housekeeping. We do have time at the end for some Q&A. You don't have to wait until the end to put your question into the queue. You can do that throughout the hour as the question pops into your head. Please pop it into the queue, and we will make every effort to get to everyone's questions today. If we don't get to a question you've asked, we'll follow up after the program. So fear not, your voice will be heard. We very much want to hear from you, so please pop those questions into the queue. And we do have a poll today, and I always encourage 100% participation. We do share the results live with everyone, and it's an excellent way for everyone to see where everyone else sort of stands on the issue that we've come together to discuss today. So if you can weigh in on that poll, that would be fantastic. And I think with that, I would like to officially turn things over to Hector. Hector, the floor is yours.
Thank you, Mike. And thanks everybody for joining. Hey, Richard, I think we're looking forward to having a nice chat with you guys about customer engagement and customer experience. Look, I think 2023, has been off to a wild start for most of us in the industry. I think we all probably thought that we'd be sitting here in the middle of the year in a bit of a different position, post-pandemic. But I think, given some of what's happened in the market landscape, with what's happened with the regional banking crisis, where the market is and the shore up of capital that's happening, making it more difficult for, fintechs to get access to capital, limiting options. And then, the fast-paced changes that we saw during the pandemic and exiting the pandemic, to the extent that we saw a lot of rapid digital adoption by customers and consumers in a lot of areas that we did or didn't expect to see that. It's really changed a lot of the landscape on where we're at today, which really makes customer experience not only important before, but really paramount today. And I think in our conversation today, we're going to chat about really the concept of just ecosystems a lot. As we all know, we of course have to be delivering our next latest innovative feature or product. We want to be as real time as possible, but all of us, especially financial institutions, live in an ecosystem, and maybe our own ecosystem, and maybe an ecosystem of a larger partner of ours, or an ecosystem of choice of products that we've, added on across the year. And so really helping to get an understanding, I think, from us and where we sit in our seat, working with so many financial institutions of different varying sizes, growth strategies, target customer segments, could be very helpful for this group, as we'll try to draw together a few sort of common threads about customer engagement and how that's evolving here, and how to win in customer engagement. One of the things I always like to share is that, from a first principles perspective, what we always try to apply here at FIS is maybe the first three principles of any product strategy, which is make it work, make it pretty, make it fast. And often, right, we overlook some of those first ones, but it's already difficult enough to get a implementation done, as we all know, whether that be for a core, a digital channel, maybe an entire new system or product that we have. So that's always job number one, is getting it live, getting it into production. Making it pretty, thinking about how to enhance that experience, make it a pleasant experience, one that's personalized. But then ultimately, performance and speed is critically important these days, as our consumers or end customers aren't really just comparing one bank's product to the next bank's product. They're really comparing it to the market, right? They're comparing it to Netflix. They're comparing it to Amazon. There is a new baseline for what a proper customer experience is in terms of those three principles. So that's critically important to think about as a backdrop as we talk about customer experience. So as we think about what are the forces reshaping the digital banking space as we see it, I mean, clearly acceleration of digitization is something that, it sounds like an old term, but you'd be surprised, how many institutions we get into, whether banks or credit unions, where there are more manual processes, paper processes that still exist that just haven't been sussed out, right? I mean, we work with institutions that are quite large, where they may be taking data out of one side of their business, turning it into insights or opportunities, putting that in an Excel spreadsheet and a SharePoint site, and trying to get that to their bankers so they can go out and effectively target their customers, right? And those are what I would consider, what I thought to be quite some sophisticated institutions who still have quite a ways to go. So where we might think sometimes we've automated a lot and we've removed a lot of manual processes, there's actually more work than ever to continue to do that. And certainly with the consolidation that we're seeing continued or possibly accelerated in the industry, we're only going to see the need to do more synergies, more efficiencies, and consolidate more systems at some of our different institutions. The customer expectation and generational shift, again, during the pandemic, I mean, we saw people, adopting online checkout, QR code scanning at restaurants, quicker than we ever have before. That's really benefited a lot of different technologies I think we're trying to drive for faster adoption. But what it's really done is it's set a new higher bar in terms of those digital experiences. And again, our end users in banking are comparing us to our peers that could even be media or consumer goods companies, not just the banking space. So there's much more of a digital singularity today that is, setting a higher standard for this industry overall. I put in here threat of challenger banks. Again, what we see changing here is not so much brand new entrants to the market who are getting investors together and building a ground up, bank and renting a charter, as much as we are seeing larger institutions setting up what we call a sidecar bank, where they are building a direct bank on a cloud native core with modern APIs and orchestration layers and modern digital channels, either to build the next generation of their own institution, right, from a tech stack standpoint, or building it for the need to go out after a new segment in the market. But the difference here is the resources, the experience, the access, and distribution channels that these larger institutions already have now, with a lot of the technology in the space, is allowing them to come to market faster in different dynamic ways. And that's something, to really both, as a lookout or watch out for, but a lot that can be learned from in terms of, quicker go-to-markets and newer technologies. And then, legacy systems, limiting our abilities to compete. I mentioned the term ecosystem earlier. And I know Richard's going to talk a bit about, customer engagement, real-time data, connecting the dots. A lot of the ecosystems that many of the institutions have acquired over the years have, perhaps been quite disconnected or disparate, and some of them may be, quite compatible. But at the end of the day, when you're purchasing, or implementing one digital channel, whether that's account origination or it is online banking or your branch solution, how you integrate those experiences, both from a customer experience front end, from a data sharing and targeting standpoint, or a back office standpoint to create a more seamless experience, more efficient experience for your bankers, can be incredibly challenging. Wanted to speak to just a bit, looking at some of the trends that we, are seeing in the market. We look at this, quite closely, for 2023. Clearly removing friction from customer journey is always going to be something that is a focus. Expansion of digital products to pursue new segments, APIization and open banking as a service, allowing institutions to build more on their own or extend new products and capabilities faster. Are trends that we're following. But I would say through and through, really, when you see the 77% here, the improved digital experience for consumers, couldn't be any more true than ever. There's obviously benefits to modernization from reducing operating costs and digitizing the back office. But really today, especially given the market and how easy it's been, as we've seen, for consumers to switch accounts, get in and get out of relationships with banks. Us enabling our bankers to create a personalized experience, really connect with their end customers, and provide differentiated experiences is again table stakes. I think the light has gone off in here in the room. There we go. I waved my hands and then there was light. Apologies for that. Maybe I wasn't animated enough. Who knows? So if we talk about the user experience, right? What are the user experience expectations? So we spent a lot of time, looking at, whether it's a commercial sole prop, right, user, whether it is a retail customer. And when we talk about users and we think about personas, we also think about bankers and the bankers' use of the products. But really, personalization is certainly number one. Not just personalizing and differentiating your experience from other institutions, but how we accommodate for specific needs of that user within the digital, banking experience. From a time and effort standpoint, as I mentioned before about the job is never done to automate. Can you take the account origination experience inside a branch from 40 minutes to, a few minutes, right, and get people in and out the door and onto their day? Anticipating what products or services the customer may need, right? Looking at data, turning that data into insights, giving those insights, as actions to your bankers, and then getting the right products or rates, out in front of your customers as soon as possible, and communicating those effectively is no simple task, as many of you know. At the end of the day, I think from a resolution standpoint, passing that data from one channel to the next, getting it ultimately to your servicing entity or your contact center is incredibly important, right? Think about the ability to anticipate what the customer could already be calling in about, right? As opposed to, starting fresh each time when you get on the phone with them. And ultimately, all of these, items really drive into, the purpose, the integrity of the experience that they have with their bank. And so as we think about the things that prevent or would prevent their institution from, giving them these experiences, it often comes down to three, items. One of those tends to be speed to market, which is, the extent to which you either are enabled internally or enabled with your third-party partner to deliver a new experience. But that also can mean how quickly we can respond to customer needs, right? How quickly can we take the data that's telling us what the customer needs, and get back and effectively communicate to them, either resolve an issue or get them a new product or service that they need. Third-party integrations is critically important. One thing that I would say here is often when we look at a bank's ecosystem, there may have been a decision made about a third-party partner that looking at the full extent of the ecosystem and understanding the interoperability and the compatibility of that third party ends up hurting you down the line, right? Some of those ecosystems, again, may be very partner dependent. So at an FIS, we have many ancillaries and partners internally. And so some of our clients are very FIS dependent. And some of our clients are very FIS independent, right? They do a much better job of building, strong intentional orchestration layers and can own and stitch together those different endpoints to create a seamless experience for their customers. So every institution does it a bit differently, but it's about knowing what your strategy is, how you leverage your partners, and who ultimately is going to own that orchestration. And then system customization, from a personalization standpoint, the extent to which the tool sets that you have allow you to create a personalized experience or customized experience. Often there's dependencies. You might have a solution that allows you to communicate often with your customers, but if that's real time and that's dependent on a batch system and we haven't connected the dots there, that often will lead to the business case not being realized at the institution. To give some more concrete examples, we often will show these different items when we talk about just sort of the modernization journey, because as I was saying, the connecting the dots isn't just about a substitution of a channel in some instances or substitution of one application, like your event bus or your alert system, right? It's many of these different systems working together. And so what we're seeing still, right, is a lot of institutions where, we're moving from monolithic frameworks and, on-premise hosting infrastructure to cloud native installations and open microservice-based API architectures that allow us to at least have the access to data and the efficient access to data as we need it. Moving from siloed data and batch process to real-time data, and exposing that data and externalizing that data to third parties or to the institution. Moving from complex integrations with little customization to more modular-based deployments, using technologies like low-code development to create prefabs so that you can quickly scale your front-end experiences. Also, modernizing the way that the financial institution does the run or the BAU in their own organization. We see quite often where we will have an institution invest a considerable amount of money, install a new product or platform, but then not really be ready for or thoughtful of what it's actually going to take to maintain that in the run, right? And so we talk about CI/CD or continuous improvement and continuous delivery, which has everything to do with how often you're going to implement change, your release management, pipelines, the DevOps cycle. So really, maturing your own organization at the time that you're maturing your systems and channels is critically important. And then, as much as we can, shifting from, one-time perpetuity kind of models to systems that run on more constant longer-term subscription fees, just to drive out, budget forecasting and budget consistency is incredibly helpful to fund the whole model. And I'll jump to this slide and maybe turn it over to Richard here. But as you think about your own institutions and what point in the journey that you're on in terms of your customer experience, your digital strategy. These are a lot of the principles that we speak about with our institutions. Simplicity is the ultimate sophistication. Simple and elegant solutions, whether that be design, process, customer experience. Digitally native experiences, thinking about, of course, mobile first, more than anything. Interoperability, I would say a key theme in this whole conversation so far, and as Richard will chat, is probably paramount. How those systems of third parties speak to one another, how that data is accessible, and how that ultimately shines through and becomes a consistent experience for the customer, whether they're online, on mobile, in your branch, online with your contact center, is critically important. How comprehensive your solution and selection is for your ecosystem. And when we talk about comprehensiveness, we're talking about making sure that you have every system, app mapped and considered for not only in the design process, but in end-to-end testing. I can't tell you how many times we get down to the point of you're going to go for a release or a launch, and it's, this broke over here because, we forgot about this next third party of ours and need to work on that integration. And then speed at the end of the day, and really speed more from the standpoint of how responsive can we be to our customers? Can we get it as close to immediate as we can with the right system? So I think I was only given 15 minutes or so. I might have nailed it. I don't know, Richard or Mike, how did we do? I'll hand it off to Richard now at this point.
Yeah, thanks, Hector. I think it's about perfect. There's so many common themes from, I was writing them down as you were talking, Hector. I think the interoperability is super important about where we're going to go with the conversation next. Configuration versus customization, I think another theme that is a big challenge. Speed to market, of course, which has a lot to do with what we just described with configuration versus customization or lack of interoperability. Data leverage, personalization. There's a whole host of themes that when you start thinking about maybe the overused term, the journey of the customer, right? From the front end of the transaction and account origination, whether that's online or at the branch, whether that's, and then how it's handed off into servicing, the look and feel, the design that you mentioned, the simplicity of the experience sometimes gets very disjointed across this journey here. So I've got some research I'm going to touch on here. Let me just get the next slide here. That we sponsored with Corinium, did some research of the top 100 global CX executives, and it really emphasizes a lot of what Hector was talking about. Around one, how data is driving next generation customer experience, the real time nature of that, the priorities that we see in organizations, and ultimately the impact of the customer and kind of where the trends that they're seeing, and ultimately where we think the market is going as well from an overall experience perspective. So, as everybody knows, the cornerstone of CX is, all about data. Hector mentioned it as well. There's a lot of, data that gets siloed, gets trapped, that is not exposed to all the interested parties. So you can't necessarily sometimes see the behaviors. You can't kind of test and learn. You don't have a lot of insights sometimes. And like Hector mentioned, simplicity is often, lost in the mix here. What's happening with customers? How are they doing it? How can you reduce the friction in the process? What are the common issues? How can you simplify? How can you anticipate the next best action? And then how can you adjust? I mean, I think that's a real big problem is it's not only what's happening, but then, okay, what do you do with it? How do you adjust? How do you leverage the data? And then how do you adjust in the ecosystem that was talked about prior so that things can happen and that speed of market's realized quickly? So that's another, big challenge. And ultimately, why does it all matter? You're, as you all know, trying to maximize the customer value, reduce the friction across the businesses. If you have multiple lines of business, multiple products within your business, trying to make that as seamless as possible, even though there might be several different ecosystem providers providing core systems and digital experience platforms and all the things ins and outs, whether it's front office, back office, middle office. There's a whole host of challenges around that, not only from a data perspective, but from an ecosystem perspective. And just some stats here talks about low effort, companies. Obviously, low effort experiences are, much more likely to buy again, right? Intent to repurchase is higher. And obviously, a high effort company is much lower from a repurchase perspective that can be, really impactful from a business perspective. So flushing this out across the ecosystem of the experience of the customer from the front end of the transaction, which sometimes gets a huge amount of focus, which obviously is really important, but all the way through, every interaction, whether it's the kind of the happy scenario where everything's going well, or the not so happy scenario, as everybody I'm sure on the call here has purchased something from Amazon. No matter the experience, whether it's something you're buying or whether it's something you need to return, you got an issue or something about, I think it's done extremely well no matter what the interaction is, and it's fully automated from end to end, very little manual processes. Like Hector mentioned, that's a big area that we see a lot of challenges in manual processes. So, part of this, challenge is siloed data and siloed communication systems. So obviously the more silos you have, the more difficult it is from an integration perspective. It's really the foundation of that integrated experience is having integrated data and having integrated communication systems across that ecosystem. That can be obviously a very big challenge. And I'm not going to read the details of the stats here, but really the net of all this is that there's still a lot of work to be done. So while organizations might focus on one part of the transaction and kind of try to nail that and get it really well, other parts of the transaction are sometimes, left behind, or the experience are left behind. And creating, obviously, digital alternatives is really important across the different types of touch points that you have with your customer. And the net of this particular slide, the bottom line here is that there's very few organizations that have fully integrated their customer communication experience into their CRM. So they have visibility in what's happening with the customer at every touch point, no matter what it is, whether it's the origination process, whether it's the servicing process, whether it's an alert that went to a customer to remind them of payment or to fund an account or maybe to renew a CD. Sometimes they don't have visibility to everything that's happening with the customer in one place because they have some blind spots in their capabilities. And again, it all goes down to data, it all goes down to integration. And then the other area that I think is a challenge too, that it's not only about data and integration, but it's also about evolution. So how do you evolve quickly? And how do you get that speed to market? We'll talk about that in just a minute, around where we see some of the best-in-class organizations really focus on that is how to get things to market very quickly. Because if you have, obviously interest rate environments changing a lot, like it has been for the last 12 months or so, getting those and the impact of those to the market very quickly can be a big challenge. And the communications oftentimes might hold that up because of some brittle and some legacy systems that are involved in that. One of the things that we see, the best organizations do is really look at, how do they integrate their core systems, how they integrate their digital experience platforms, and then how they integrate the customer communications that come out of those experiences, whether it's a, alert about a low balance that's coming out of the core system, or whether it's the front end of funding of a new account, maybe in the digital experience platforms that, obviously Hector's very familiar with. There's a lot of back office communications that kick out, whether it's, ticketing or complaints, whether it's case management systems, whether it's call center interactions, whether it's physical things, whether it's something coming out the archive, or some other ancillary system like, bill pay or remote deposit capture, or maybe it's a fund transfer. There's a whole host of, fragmented experiences that come out of these transactional systems and some of the ancillaries that create a lot of fragmentation, and ultimately it undermines the digital presence or the consistent experience that everybody's trying to accomplish. And where we see the best in class, organizations, really succeed is over here on the right is having, a consolidated integrated experience platform so that they've got a modern communications environment, they got flexibility, they've got, low code, no code capabilities. So speed to market, same thing Hector was talking about as well. Centralized control of what's happening, economies of scale, the transactional model, the financial model's got to be able to scale. It's got to be, consumption based, and then ultimately modernizing the CX. And from what we see in a lot of, antiquated, systems that are hard coded, there's a lot of one-off application builds. There's, typically not a lot of centralized control. Sometimes there's an organizational alignment issue because the communications touch a lot of different areas. For example, alerts may be owned by the digital team, but the documents are owned by operations, and call center owns their own communications environment. It gets very fragmented typically that we see. And ultimately that experience gets, it becomes obvious to the customer that, something's coming out of some system, looks very different, has a different look and feel, maybe not as modern, certainly not as real time. Whereas, the modern, organizations have a lot more, flexibility in, getting the right information to the right customer with the right content at the right time and the right channel. is really kind of paramount to that. And ultimately, the bottom line of the left side of here is that, this fragmentation that's a big problem undermines the digital presence that everybody's trying to improve and focus on. All right. So, Mike, we're going to have a poll here, and Mike's going to guide us through that. So, Mike, you want to kick that off?
Yes, definitely. Thanks, Richard. Yes, this, everyone, is our promised poll for the event. So I'll just kind of read through the question here and give everyone some time to make their selection. But the question is, what percentage of customers say they would switch banks if communications don't meet expectations? So I'll give everyone just a few moments to make their selection here. But while we're waiting, I did have a follow-up question for Hector, kind of just based on that past slide. And Hector, could you maybe talk a little bit more about how the digital banking platform consolidation is sort of impacting banks?
Sure. Yeah. The channel consolidation. It depends again by each institution, right? I mean, one of the things that's happening is a lot of institutions, even some of the largest ones that are out there. I mean, your top 10 institutions are probably building a lot on their own and have the resource and capability to do it. But a lot of the institutions, even in a $10 billion to $100 billion range, are still partnering with a lot of folks like FIS, like Precisely, and as they try to gain efficiencies, they still really want a lot of control, right, in that ecosystem, like I was talking about. And so where we find the battlegrounds to be truly for the institutions who can compete are those that really get expert at managing, what I would just call the orchestration layer, right? So, your API gateway, API tier, your calls, your communication layer, a lot of what we just spoke about here and what, some of the capabilities Precisely can provide become very critical in terms of allowing you to have more of a headless experience or be partner agnostic, right? So whether you have, one partner to run all of your digital channels, front end, or you have that across a dozen different partners, maybe you have multiple cores as an institution to serve different businesses or retail deposits and large loan business. Becoming expert at that orchestration layer is going to give the institution much more latitude in the kind of market and environment that we're in, whether they're growing organically or growing inorganically, or need to be responsive to market change. So you will see and are seeing a lot of players in the space offering up and creating their own banking as a service offerings, their own open banking offerings, and trying to compete in that orchestration layer much more so than in UI, for instance.
Interesting. Thank you. Thanks, Hector. And I think I see that I've got a little handy tool down here that lets me know how many folks have participated, and we've got a nice selection here. So let me go ahead and share results. And all right, so 40 to 60%. So what? Let's see, what percentage of customers say they would switch banks? Communications don't meet expectations. So 45.1%. 40. That's the number one. That's the number one. That's great. Richard, what do you think of these results? Are these kind of along lines of what you were expecting, or any surprises here?
Yeah, I mean, it's kind of, there's a big risk is kind of the net of this, right? If you look at kind of where the concentration of about 78% of it is there's a lot of risk in the loyalty and retention space. And I want to, pick up the thread that Hector just mentioned around the orchestration layer. So, the orchestration layer, in my mind is happening in a lot of different levels. It's the CX orchestration, like how smooth is that process? And when there's friction, how well does the organization handle that? So that's from the kind of CX perspective, how seamless, how quick, can they move on, kind of get about their day, like Hector mentioned earlier, and get on with the transaction. That's kind of the CX output of that. And then there's kind of an operational piece of the orchestration that, has a, big cost, impact, is that there's a lot of manual processes that are going on behind the scenes that, we still see as well. I mean, it's amazing what I see in large organizations that have tackled kind of part of the problem, but not all of it end to end. So there's still a lot of manual processes, a lot of costs that are issues around that. And then the third thing around the orchestration, I think that it goes probably unnoticed, obviously, to the customer, but certainly within the organization, inside the bank, there's a lot of governance and control issues. So having if there's something that's not right in the experience that's causing unorchestrated customer experience, can they make changes really quick? Can they pivot very quickly? Not often, fast enough. So again, kind of going back to the poll here, there's a lot of risk at loyalty and retention around if the communications don't meet the customer's expectation. So thanks, Mike, for chairing that poll for us. So just the outcome, this is some research, obviously the same research I mentioned earlier around Corinium, but it's about 63% said they would switch banks if they don't meet the expectations. And then, the other thing too here that is on the right is that, the anytime, anywhere accessibility. So having, that, app in your hand, being able to execute a transaction, being able to get confirmation of information is really paramount. So what we see, and, I was on another panel talking a little bit about this at a conference not too long ago, and someone brought up the question, well, banking relationships are pretty sticky. Is it really this risky? Mike, you might remember that. I think it was one of the comments from one of the other presentations you helped us with. And, it's interesting. I think from what I see, and Hector, I'd be curious what you might have input on here, is that you may not lose the customer entirely immediately, but it'll erode over time. So like for me, I have a kind of a large, top 5 bank that I do business with that, has a lot of my business, but I have banking services and other banks around the edges for other things. So it's not so much that, the stickiness is something to ignore or just, kind of rest on that the relationships are pretty sticky. They're unlikely to move. It's not that hard to move, and it's not that hard to move slowly over time based on how fast some of the newer banks are. Hector, I don't know if you have any comments on that, but I heard that in one of the last presentations I did, I think, at the conference. So I'd be curious if you have any input.
Well, no, just to say that on the poll on the previous slide, I was surprised how much everybody on this call would say that they would switch, especially given that most of the people on this call, I presume, are bankers themselves. And look, that we would admit personally that we too would change, quite flippantly, right? If we didn't have the right customer experience. And I think that beyond having the right tooling is having the right partners and access to benchmarks. So, when we say what is that communications not, to say that it's not meeting expectations, what does that mean, right? Does it mean that you're over communicating, right, with them? Does it mean that you are not communicating enough? Does it mean that they received an errant message that might make them suspicious of activity on their account and question the security and the systems of the bank? That would ultimately, get people to move. And I think that it's quite telling of sort of how sheepish, right? I think that customers are right now in the industry, and for good reason. So all more back to the point that this is really more important than ever to get this right. And I think working with the right partners to get that benchmark data. Oh no, I haven't moved enough again. The lights have dimmed again on me. Maybe that's when I'm supposed to turn it back to you, Richard. Is the signal for the room? But
I think
we can still see you. Don't worry.
Yeah. I think the new building there is very energy conscious. So I think
there
that's
we go.
probably
There we go. That's good.
Yeah. But yeah, and just to wrap up this slide and then probably kind of get to Q&A here pretty quickly because we got about 20 minutes left or so. But this left side of here just talks a little bit about organizations and the percentage they're planning to change and or have changed in the past 12 months around certain areas, plan to change in the next 12, or no plans at all to change. On the right here, the right circle, talks about, the organizations that have changed or plan to change, imminently in the next 12 months and creating a digital alternatives to in-person touch points. So obviously it's probably no surprise. And then on the left here, the organizations that have closed or reduced in-person locations permanently in the last 12 months, no plans to change, is about 30%, and then about 28% on the on the blend or change in the last 12 months. So kind of some interesting stats that come out of that, which to me kind of means that obviously you've got to kind of meet the person kind of where they are. So whether it's in a in-person interaction, it's got to be, you got to be able to follow up, and you got to be able to kind of complete the interaction digitally, in my opinion. And then of course, there's a lot of focus on, creating more digital experiences. That goes without saying here. And obviously not many people plan to not do that. There's only 1% there. So some interesting stats that came out of the research that we sponsored. And then, what we typically see, kind of building on, the fragmentation and, the data issues and the ecosystem that we typically see. So we start talking about communications capabilities, and the challenges around that is there's a lot of fragmentation of data, a lot of fragmentation of systems, a lot of fragmentation of partners. So this is what we typically see from a challenge perspective, just as kind of a snapshot of current environments that we work with various institutions on, whether you're dealing with, say, for example, P2P, something coming out of Zelle, or a remote deposit capture system, or a debit card system, or a deposit lending system, or online banking or mobile. It doesn't really matter what the system is. There's a whole host of, core systems, a whole host of ancillaries that have communication capabilities. And sometimes it's not orchestrated very well. And what that means is the use cases across the middle, from your kind of traditional documents all the way through the digital alerts that are continue to expand the channels over here to the right. It's a big challenge to manage. And not only from a customer experience perspective, but from an operational efficiency perspective, from a governance control perspective, this is very hard to manage. It's also really hard to evolve. So I think sometimes that gets overlooked is, victory's not declared when you get something into production. It's a continual process. So being able to evolve and having the challenge when you have this much fragmentation of evolution, these products and systems are not necessarily designed to evolve together. They have kind of their own life cycle. So it makes it really hard to manage this. And on the right here, out of the research, what we found is, the CX leaders rated their quality of their current customer experiences, and it's not very well, 6.7 out of 10. So there's a lot of improvement that can be made. And, when I talk about speed to market, Hector mentioned it throughout his presentation, configuration versus customization, it takes a long time to change the communications, is what we typically see, at least 90 days for a lot of changes. So if you're trying to get a product to market, it's great having flexibility upstream, but what ultimately holds up getting to market is the communications experience downstream. And given the fragmentation you see on the slide here, this is why it's so difficult. So there's a better way to do that, and that's part of the a unified engagement platform. So when you think about a unified digital experience platform like Hector supports within his business, a unified communications environment like someone like Precisely might offer, it shows a big opportunity here to weave the various systems into one unified real-time experience across the various types of use cases here, the kind of the dark purple, across the various channels which continue to expand and into WhatsApp and all the other channels, whether it's SMS, whether it's video. There's a lot of interest in personalized video that we're seeing. Obviously, chat experiences, call center experience, portal, traditional print, of course, mobile experience, push in an app, and of course, email. There's a lot of opportunity to consolidate this orchestration from left to right. So you can have, speed to market. You can have, the right customer experience. You can have, much more efficient operations, much more control and governance, and ultimately, maximize the value of your relationships by being able to pivot quickly and have the speed to market. So that's kind of a wrap of my piece here, and I will click to the next slide here and let Mike take back over and kind of moderate some Q&A. We got about 15 minutes left, and we'll go from there. So, Mike.
Excellent. Yeah, thank you, Richard. So now we've got some time for some Q&A, and so if anybody out there has got something on their mind, now would definitely be the moment to get that question into the queue. But we have some good ones here already, so let's just jump right in with this first one. So Richard, let me lead off with you on this one. What is the biggest risk with transformations within core, DXP, and CCM? Can you share specific client experiences?
Yeah, there's a lot in play. I think as I think about the banks and insurance companies, financial institutions that I've dealt with, whether it's retail bank, whether it's a digital bank, a mortgage company, wealth company, it doesn't really matter. one of the things I see is sometimes it's difficult to get, organizational alignment on what you're trying to accomplish. And, there's ways to solve that, but there's a lot of different ideas and there's a lot of different places to start. And sometimes organizations don't know quite where to go because, if they're not used to transforming at this scale, sometimes, they might think they're boiling the ocean. So having some guidance, I think is really important. And that's one of the risks is really, getting everybody on the same page. There's oftentimes multiple executives that touch each part of this or own part of this. So getting that organizational alignment, knowing where to start, I think is really, a challenge and a risk. So there's some clarity up front in what they're trying to accomplish, and then how they go about doing it has to be kind of a iterative process. But getting the clarity on what they're trying to do up front sometimes is a big challenge. I see RFPs that, oftentimes aren't very well thought out because it's either too narrow or too broad. So there's got to be a little bit of a balance there. So Hector, I don't know if you've got some thoughts on that, but that's at least my perspective on what I've seen.
Yeah, that's a good one. I mean, I would go back to a little bit of what I talked about earlier about doing the homework on your ecosystem. Maybe even post the RFP, right? We've seen a number of times where there were device integration dependencies, infrastructure that probably needed to be changed, systems that house the data on the bank side, assumptions around APIs that were there, not there, really doing the due diligence on the institution side to ensure that they know what what needs to be true for them to get all the value out of a communications platform or a digital channel that they're going to be putting in is certainly number one. And the second is just knowing what the experience is like and what dependencies there are on the bank to operate that in the run, right? Getting to day one is only half the battle, but knowing how to train up and support and maintain those systems post go live is incredibly important and sometimes overlooked. And listen, a lot of the times where people don't do their homework, right? There may be a partner that the institution may have that says, "Hey, we're sunsetting. You got to go somewhere else," and so there's a scramble. But there's certainly avenues and partners and system integrators to work with who can help do some of that due diligence and parallel path some of that planning, so that you have the best chance for success, so that you can start realizing your business case, from day one when you go live.
Yeah, I think that's a good point, Hector. Something I see that's kind of, I think, right in what you're talking about there is that sometimes organizations don't have a real good sense of their current state, right? I mean, like what's happening today. It's so complex. It's been around for a while. People have left, so knowledge is gone, and oftentimes you ask about current state, like, hey, do you have a current communications inventory? And typically no, right? So kind of goes to what you're talking about. And then of course, tying that off to in-flight projects and other dependencies downstream or upstream, exacerbates the problem because honestly, they may not be aware of what's happening downstream or upstream because, the ecosystem is so complex. So I think that's a really good point from a risk perspective.
Excellent. Thank you both. All right, getting some good questions here. So next question, what are key best practices to track or measure customer feedback, VOC, in integrated approach? Richard, you want to give that one a try? Or?
Yeah. I mean, one of the things I've seen, just capturing kind of voice of the customer, whether that customer is internal or external. So I'll start there for a moment because I think that's really important is, I've seen best practices on doing a lot of interviews, with the different parties that are managing the experience. So I'll give an example, mortgage company that we're a pretty large mortgage company, top 10. We did a pretty extensive analysis of their current state, and we spent a lot of time with, the call center. We spent a lot of times with back office. We spent a lot of times with the complaints department, a lot of times with the servicing department, the originations department, on and on and on. And there were 34 different departments producing communications. So, and we collected data around that, what they're hearing from the customer, what their problems as the employees. I think that gets overlooked because to me, there's a value proposition. When you have people in the service industry, I think the CEO of Delta might have mentioned this on a podcast. it's really difficult for people when they want to service customers and they don't have the right tools in place, right? Because they want to do well and service a customer and have the experience they want, but they can't because they're kind of handcuffed with the tools that they have. So I think one of the things that gets overlooked is or the challenge around that is sometimes the internal employee experience gets overlooked, and sometimes the patience to go through that process is sometimes not there. Being able to go through and collect, what the call center is hearing, collect what the back office is hearing, collect what the branch is hearing, go through that process. It takes some time, it takes some resources, but ultimately that benefits to get some consistency around ultimately the objectives of the transformation might be. So, Hector, I don't know if you have any color on that, but that's just a little perspective from what I've seen.
I think I would just say ditto. I think that was well put.
Yeah, thanks.
Excellent. So, Hector, let me throw this one to your way. How does today's discussion apply to commercial banking? Do you see a direct parallel, or are there unique considerations for commercial?
It's a great question, and there's different segments of that space, right? Not to say that all customers or consumers are the same, but the commercial banking space is also setting new expectations. I think that there are more retail depository consumer experiences that are starting to accommodate especially micro and small businesses and sole props in the consumer retail experience, which is really, an exciting opportunity, because then to the extent to some of the use cases that Richard has shared, myself, we can start to account for at least that segment, which is a fast growing segment and a segment that you have a tremendous opportunity to cross sell to, allows us to cover the base there. And that really, is extending up towards, medium-sized businesses that can view their accounts in one place, do money, business related money movements, in one place without having to go to a dedicated, business servicing experience. But even in a pure commercial, banking experience, I think the rules still apply. If anything, there's probably more data, more assignees or signers or entities that can be targeted or accounted for within those businesses, and larger stakes at the table. So I think the principles absolutely apply, and we're already seeing a lot of these capabilities reaching the micro and small business segment, because again, that is starting to blend together in digital banking experiences. Richard?
Yeah, and I've seen some similar themes there that where there was a retail focus initially, like for example, saw a bank implement a new business checking account, and then obviously they got some commonality with their retail checking accounts. They want the experience to be much the same, right? So, Hector, exactly what you're saying is that there definitely is an expectation that experience is consistent, really no matter what it is. And if you look at it with another super regional bank talking about their account analysis process, right, and having the right level of data, Hector, to your point, I mean, there's a massive amount of data going on with all the transactions, wires, whatever it might be that are going on there, and having visibility and alerting, so real-time access to data, real-time access to transactions for the commercial banks, I think is really important as well, because, again, they kind of think like consumers too, because they're both, right? So they're expecting, having access to information much like they do in their personal lives. So I've seen it, certainly in both directions. And a little more so lately. I'd say probably in the last couple of years, I'm seeing more of that.
Interesting. All right, we are very close to the top of the hour, but I think I can just squeeze in one more question here. And this one, we may have touched on this a little bit, but Richard, just maybe there's just a little more color to add. So the question is, can you share a bit on engagement processes for these types of transformations? What are key lessons learned?
Yeah, I think the biggest key lesson on the engagement process, just as I work with various institutions on, from the beginning of the cycle to kind of the end of the cycle, the one thing that I see is, and I coach the executives around this, is that you got to have somebody that kind of owns this experience across not only digital experience platforms, but all the communications as well, or some two people that are leading it maybe sometimes, because it becomes hot potato. Super regional bank I was mentioning, we were talking to, is that, the decision-making process on what to do across not only Hector's world, but my world too, from a communications perspective, oftentimes is very bifurcated from an ownership perspective. And it comes a little bit like hot potato, like who owns it, who's going to make decisions. So, one of the things that I suggest early on, that if I don't see an obvious owner of the space, is kind of bring that to the executive level of attention, that, you need to, if you're going to go down this path of modernization and transformation, you got to have somebody, that's really driving it at a senior level. Otherwise, it becomes a land grab, gets very complicated, and it just ultimately makes it much harder to execute. So that's my perspective on kind of, best practices around engagement. Hector, I've been curious if you have any color to add.
Yep, I'm certainly not in the dark on it. Haha. Third time my lights went out. You said it really well. When I sit down for the first time across the table from the executive team at any institution that we're engaging with, if it's only the CIO organization or purely a tech organization only, I have an kind of moment, right? The institutions that already have their respective business partners at the table, whether that's the commercial banking team, the private wealth team, the retail deposits team, the branch operations team, but also brings their CMOs to the table, right? Because at the end of the day, as we said in this whole conversation, the digital banking experience is a personalized experience. And personalization comes from data, it comes from targeting, right? And it comes from timing. And if you don't have the business partners and marketing in the room, you're missing out already on half of that value. And bringing them in too far down the line, even if you're not putting in a customer engagement platform specifically, doesn't allow enough time to get their considerations and needs into the design, right? Or grooming of that experience. So definitely need a seat at the table at the beginning of the exercise.
Excellent. Great points. And I think that those are a great note to wrap up on. Actually, here we are right at the top of the hour. I like to keep things running smoothly here, make sure that everybody in our audience can get to their next appointment at the top of the hour. So first of all, let me thank Hector and Richard both. Really interesting discussion today, covered some good ground. And of course, everyone in the audience, really appreciate your presence, your participation in that poll and your questions here at the end. So thank you so much. We'll be sending you a follow-up email in the next day or two that'll have a link to a recording of the event. So that will be wending its way in your direction. And with that, I think I will officially wrap it up. I would love to wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon.